There's your data on time this week, Mike McKee. Good morning.
Yeah, well, we're hoping that we continue to get that kind of speed out of the government. Durable goods orders coming in down 1.3%, which is a big disappointment because they were expected to be up by 0.8. The prior month revised, can I say the word, to 1%. So you pick up 0.2 back there, but it's still a decline in durable goods orders. Ex-transport, though, up better than expected, 1.0. So I haven't gone into the details yet, but it looks like this is cars probably because car production shut down with the chip order problems. Capital goods orders, non-defense, ex-aircraft. This is the one that we watch because it suggests where business spending is going, and this is good news. 2.3% gain for the month of April, better than the 1% expected and better than the 1% we got in the month of March. So there's some good news there on business spending as companies start to come back from the pandemic. Jobless claims. This is kind of fun. We almost made it below 400,000. 406,000. That's a drop from 444,000 the prior week. And so we are at our post-pandemic low by a lot. Remember when we were around 1 million? We're getting back down into the area where we used to be before we got into the 200,000s. This is a much more normal look. GDP comes in at 6.4%. That's a tenth less than it came in the initial print. But the initial print, 6.4%. I'm looking to see where the change is. It looks like personal consumption went up by 11.3%. So the former was 10.7. So it looks like it was probably in another area of that. And then just looking quickly here, I don't have the profits numbers yet.
Well, Mike, you go through the details.
Numbers we want.
I'll run through the price action just quickly. Yields elevated, up almost 4 basis points on a session now to 161.31 on a 10-year maturity. In the equity market, we stay negative at 41.89 on the S&P 500, down about 1/10%. But TK, that is the right kind of downside surprise on jobless claims. We want to see more of that.
And it's going to go into what we see, the GDP when Michael McKee breaks it out. And again, personal consumption there booming. Mike McKee, can you correlate a really elegant claims chart in the path of claims to a better place, to the unemployment rate or to GDP? Do they link together?
They link together in the broadest sense, but remember the GDP is first quarter, so that was January, February, and March, whereas we're looking now at what's going on going forward, and I think that's what people are really going to be concerned about with the fact that we're seeing the jobless numbers drop as much as they are will feed into what the Fed is thinking about the labor market, which therefore feeds into what the markets are thinking about the Fed. Durable goods orders suggest some strength, and if you've got a lot more orders coming in, you may need more people, so it all may link together.
Meanwhile, tomorrow we're going to be getting personal income and personal spending data, as well as the key PCE figures. Are these really much more important at this point, given where the Fed is at, than even the unemployment figures, the filings that have been really noisy?
Yeah, we're going to watch those numbers, importantly to see in terms of personal spending, especially because we want to know what the services component of spending was. We know that people spend a lot more on goods. Are they starting to spend more on services? You can back some of that out of the GDP numbers, but this is going to be the first month of GDP for the second quarter reported. So we don't have that information yet. And, of course, we get the PCE price index, and that's the one the Fed follows. We'll see what kind of inflation we're getting there, whether it matches the kind that we saw with the CPI last week.